All right, let's look at the bonus video I want you to watch again on your trading. And I assume you have finished the first stage of the training and understanding the price action and what you need to do. You have done your registration, and of course, you have followed some of those stuff. Now, you need to have your trading view like this. And of course, you've done the needful. Now, let's quickly go. This is the bonus video. Pay attention. Bonus video on daily routine with pass, price action, resistance, and support strategy. First of all, you want to, when you come to trade, and I think the first thing you even need to know is not even the number one is this. Ensure you do your pre-market, all right, before each trading session. We have Asia section, London section, and New York section. Understand that Sydney, right? I think it's Sydney, not Sydney. Understand that Sydney and Tokyo combined is called Asia section, all right? And that's the chart you can see. There is GMT winter. So when it's winter, you know, those, so like now, I think we're in winter, right? Are they? Okay, you can check. So winter on GMT, that is the London section is 8 a.m., right? So why the Asia section start from 9 p.m. because it's combination of Sydney and Tokyo. If not ordinarily, practically it starts, the Tokyo session is actually from 11 p.m. That's the Asia section starting. All right. Then when is the in the when is summer, the London session start by 7 a.m. in the morning, and then you can check your own timing with London section. Nigeria almost do the same time with London, and so New York session start by 12. I think that's where we are now, and then 10 Sydney, while it's the 11 Tokyo normally. So follow the conferences. All right. So let's look at the first thing we say. Check the are there economic news. So then let's go to what is called Forest Factory. You can use any platform. I have different platform I use for, but basic beginners, you're going to use Forest Factory. So let's go to the economic calendar. So now you can just check. You can click to take precise date. Today is 18th, and I click apply. Are we having any news today being 18th? GBP, there was a news. And so that's why when you are trading some of those currencies, you want to pay attention to what's this news. How do you read the news? Now, anyone that's on red envelope, they are more important. They are critical news. Now you have a forecast and you have the previous result. Now it was predicted by the forecast that okay, 3.3%. Now, if you click on this envelope to open it, they said, look at what you need to read to understand. Actual greater than forecast is good for the currency, meaning if the number increased, that means this was a favorable news for GBP. Now, if it's less than, that is negative for GBP. So you can interpret all of that. Now, for Nigeria, for most of the trading beginners, I always tell you first you need to start trading with US dollar pairs. And we have crazy news today, being Thursday and Wednesday. We have unemployment claim. Now, the previous time, we have 248,000. And then what is forecasted that the job unemployment claim should reduce, that we should have this. Now, if we have anything more than this, that means it's even higher than the previous time. That means US dollar strength will go down more. Okay. Now I said actual less than forecast is good for the currency. So we should have less than. But if you have more, that means there's so much unemployment, and then of course it will weaken the strength of dollars. So what is the direct interpretation? If you are trading any currency pair with dollar, you have to be careful. All right. So now afterward, by 7 p.m., you are having federal fund rate. We have FMOC, economic projection, FMOC statement, FMOC press conference. That means today it's a load of news. So if you are trading anything, when it's getting closer to that time, you want to tighten your stop loss, your take profit, and all the necessary stuff. All right. Now, so let's quickly go. So that ensure to know, okay, what session am I trading? And so that you can mark your entry so that you can understand. Now, there's an advanced thing I teach about Asia section trading strategy. It's not for you basic. If you want to know more about that, there's a need for you to enroll or probably increase your funding. Yeah, maybe you are having about capital of maybe 1,000 or 2,000 or $5,000 and above in your capital extend, then I can teach you that and you have access to. And in fact, it's one of the conditions that if you have up to $5,000 deposited in your capital extend, then you can have one-on-one mentorship with me. I can teach you more 3 advanced strategy, but this basic is enough for you. Now, so let's go to do pre-market analysis. But of course, you already have an idea. Okay, I want to trade London section and all of that. Okay, so now let's go to the let's go to the trading view. So follow the confluences of your 3-step mark entry: price action, momentum, and trend. Now, that is, your price action is combination of your candlestick, market structure, support, and resistance for price action. Then MACD and RSI for momentum, and 50 EMA for trend. So 3 things you are looking at: price action, volume, which is momentum, and the 3 you are looking at, so price action, momentum, which is volume, and what's it called? And trend. So where are we trending to? Then you look at your proper entry and all the like. Then risk management. Okay, so now let's go to summary of what we have just explained here. Now you can see I sent a signal. Many people may not understand what I sent here. This is what called Fibonacci retracement, but don't bother about that. Why do I send this signal that we're going to sell more and then we're actually selling more? Now let's quickly look at Bitcoin itself, irrespective, sorry. So let's look at Bitcoin itself. Maybe we can use Bitcoin in another environment, or let's look at Euro USD perhaps. Okay, let's look at Euro USD or any other instrument differently. All right, Euro USD or GBP USD. I just want to do one. Okay, so you can see so many news today are waiting. So you have to be very careful. So now let's go. Now, as a day trader, right? So ordinarily, a scalper don't need to go to higher time frame, but as a day and a intraday, you need to start from 1 day. Now, so I'm going to do something very quick. So what you want to look at first, remember your price action. Your price action is combination of candlestick, support and resistance, and market structure. All right. So if you look at it now, this market is an uptrend. You know that. So these are not trend. Why? Because the presence of a low, a high, a low, a high, a low, a high, a low, right? So a high, a low. So this is another high. This is a low. Then we're having a high. This low, has it taken out this? No. So now let's look at it. We're going to mark out important levels that are very, very crucial for you. Now, this is the most recent low. This is the low that you can see daily and actually like a double bottom already. So I just want to mark it out. Now, this is your pre-market analysis. All right. They are good when you do it pre-market. There's another low here. So I don't actually need this low because you are just a day trader and intraday. You are not a swing trader. But perhaps I marked it. Then you want to look at the most recent high. This is the highest for now. So all this area you mark, they are support and resistance point, and then probably we call them liquidity point and all of that. Now the next you want to identify is the previous day close and open, which is the market, the previous day high and low, which is this single candle here. So I'm going to mark this. So this strategy is very simple for you. So you need to settle down to master it as a beginner, and it's going to help you a lot. Now I've marked this. So, and then obviously, even this one now align. Do we have it aligned? Let's check. You have to check it properly. Sorry. Okay, so this guide actually touched into this, and sweep this previous liquidity. All right. So now that means this low become not a new low at all. This become invalid low. This is the most recent low. So you're going to look at it. There's a tip down. You probably may not see it properly. So I'm going to mark that previous day low. It aligns with this, but they are different. Okay. So previous day low and previous day high. Now, remember that this actually done before market open. So if it's London section, you are trading in 7 a.m. So at 6:30, you do this. If it's New York, you are going to trade by 12 p.m. or 1 p.m. At 11:30, you do this. Like now we're 11:30. So probably you are targeting like New York. All right. So now let's go. We have marked this. We have marked the high, previous the high, and previous the low. So sometimes I label them, just double click, and I go to text. And then I enable this and I put it previous day high, PDH. Now, when I put it, it's still showing this. See what I want to do now? I want to align it. Instead of center, I put it right so that the right top can be at the right. Okay. Then I'm going to do that to this one. So previous day low. Okay. All right. Right side. And I click OK. So if you look at it now, I have a kind of trade range, a trading range that's going to, give me what I'm looking for. Now, so if that's done, there are other pivot level you want to actually mark that was obvious. Maybe I want to mark this place that was obvious. Okay. Then when you go down to lower time frame, then you can see it better. So when we go to 4 hours, can you see 4 hours? So now this is like liquidity is swept here and all of that. Okay. So 4 hours. Remember, your previous day low is here, but it was not swept today. So then you have your previous day high, right? Which is here, up there. Your previous day high. Now, sometimes if you want to help yourself not to be stressful, I say you should do this. Right click on your screen and then put it and enable your session break so that you will not confuse yourself. Now, so let's go back to, okay, are there other area we probably can identify here? Yeah, of course, this place where the market is actually an important area thereabout. So I can mark it perhaps here. So this can equally form a resistance or a support eventually. So let's step down to 1 hour and then good. So here is 1 hour. Do we still have area we want to mark? No, we are good, right? Then, so straight to 15 minutes, however. Okay, so in 15 minutes, do I still have some areas I want to mark? The answer is actually no. There are no areas I want to mark. But in 15 minutes, there's something you will observe here. In 15 minutes, what I observe here is that this guy formed like a double top. You heard me right? Formed like a double top. How do I know? You can go to your candlestick and change it to line chart. You see that this is like a double top. You want the neckline to be broken. But that's not even the issue. The issue is this. The market is actually at a critical point. If this market needs to buy up very well, then there is a liquidity may return back to grab here, right? So if you go to 5 minutes, so you're going to see very clearly, right? Now, what do I see clearly? Remember, there was a point you have marked here, which means this is a potential sell, right? Because you cross and then you are now below the resistance, as it were. So meaning you are looking for the market to actually come to sweep any of those liquidities before buying up. So now this is pre-market analysis. You are waiting for New York market to open, and then you can find an appropriate entry. Or else, let this market return back and cross this point for you to find a buy. You can see why sometimes you now want to wait. Now, and I said your MACD and your moving average. Now, listen, moving average, that's trend and momentum, actually work much when the market is trending very well. But when in the case where the market is going sideways, your trend momentum may not work well. Okay, it will mislead you. So let's look at the MACD. So the MACD, it shows that okay, the market is actually in an uptrend for in this 5-minute time frame, but there are no volumes to motivate the market to move up as high as possible. So better still, you want to wait for a market open to gather more momentum or liquidity to be added and all of that. So for that, this type of market, you are waiting for this market to sell down. So what am I going to be looking at? I'm looking at the market probably to return back to this point and sweep this yesterday low, and then I can be looking for a buy. So in a nutshell, what should I do with this market? I will do nothing. All right. Now, but what if the market now sell down and break and continue to go down? Let it go. So you always find a way to wait for your setup to play out because you are trading support and resistance. All right. So this is the thing. Now we said the next thing is, what do we say here? So okay, follow the trend and all of that. And proper entry point is either in a reversal point or a pullback or a breakout and return. These are the three ways of you entering your market. Then, having done that, you're looking at your risk management, risk reward. We'll say 2:1, targeting 2 times 2 of what you are risking. All right, targeting times 2 of what you are risking. You see what I said? We have three major trends: up, down, and sideways. You need to reorganize. All right, you need to recognize that your 50 EMA and even MACD may not even be effective when the market is ranging. So you will be left with either getting out of the market or use strictly your PA, that's price action. Targets, all right, target small profit if you must trade range market and also come down to a lower time frame. Okay, so these are just acronyms that you need to study to get acclimatized to. So here is this. I'm not finding any trade here. I'm waiting. And then if you gamble this as okay, let me sell since it's coming down here, the market can turn around. So that's one of the things that you will have to wait for appropriate market entry. Are we getting it now? So for this guy, I'm waiting to buy when the market crashes down, sweep the liquidity. I'm waiting to buy. And if I'm going to buy, then I'll be targeting so many areas, right? These are areas. Okay. So can you see? So the market should come down. You may now say, Fairly, why don't you sell? Now, let me use an example. If I'm going to sell, for instance, let's look at it and see if I want to sell. Let's see if I want to sell. Let's just try that. Okay, so let's continue. So let's continue, like I was saying. So if we go to, so let me go to the trade and go to select GBP USD, GBP USD. Okay. So now, so GBP USD, like I said, so this is 5-minute time frame. You can see the same here. So let's close this point. So that's to say this is the previous day low. So if I want to sell, so let me just use little sell, then I click on sell like this. Now, this is it. Now, the risk reward ratio we talked about. The risk reward ratio we talked about. Okay, so now I took 2 positions, right? And then we're talking of risk reward ratio. Now, you know, this is not a proper order. And that's why it's always a problem when you enter a trade in a wrong place. You can't really identify proper risk management and the system you're supposed to follow for your risk reward and all of that, because you're already waiting for appropriate time of entry. Because if you're asking questions when you enter a trade, what made you to enter that trade? You say, I thought it was. No, you don't do that. So, but let's now look at our risk reward ratio. You have an instrument here. And so if I go to the trading view, all right. So that means you have an instrument here. And look at it. This instrument here, you just place your cursor, you see long, short. So that means what I'm doing now, I'm selling. That is shorting. So depending on where I enter from, let's say I entered from here, and I put my stop loss, let's say above this recent swing, and then 1:2 now. And I have a law. What's my law? As long as what I want to sell, the place I'm selling from, if my target cannot get to minimum of 1:2, that is 2 against 1, I want to lose 1 to make 2. When the gap or the space of that move is not going to be up to that, it's not a valid entry for me. That's a gambling. You get it? And that's one reason why we're waiting for this. Now, your own may be like, since we're sure that the market was going to come down here, and let's sell now so that we make that money first. That's the gambling. You have to stay and stick by your rule. Market should come down here, right? Market should come down here and sweep this liquidity. Number one, market should come down here, break and retest. So if you break below this low now and now retest it, that means you want to continue selling. But if you sweep it, maybe fast, how will you know that it was a sweep? You will rush into it, maybe with a long candle and a weak return back to the zone. Then you are just waiting for market structure shift. So once that happens and all of that, and then see change of character, so you now want to buy in. So you selling down here is gambling, because the market can just return here and probably just sweep this liquidity and return and take this high and continue to buy up. Then you now be running here and there. So these are the reasons why you have to really know what exactly, what you are doing. Okay, exactly what you are doing is very, very important. So now let's look at the risk reward ratio here. Now, sorry, I'm using this trade locker. That's why you're seeing this way. So let's say I put it down here and I see my stop loss above this high, this highest. Now my take profit. So you can see now me targeting 1:2 will not work. This is 1:1.5 or something. But let's just leave it at that, okay? So let's say if it's going to sweep liquidity, perhaps can just tap into my 1:2. So let me just put it that way. But however, but that's not proper. Now, so let's go. So now what am I going to do? Now we have set the market of where we're going to take profit, stop loss, and all of that, okay? Remember I said we want to wait for the market to actually come down, right? So now here are the two positions we entered. So now let's do our take profit and stop loss. Where do we target to take profit and where's our stop loss? So now our stop loss, let's look at it. So our stop loss, I think our stop loss is at sorry. So our stop loss, okay, so let's go. Our stop loss is 1.34. If I'm correct, 1.34, 1.34, 794. Yes, that's our stop loss. So our take profit is at 1.34015. 1.3434015. That's our take profit, which says it's going to give us $10. And our stop loss is going to give us $4.94. We get it now. Now we click on confirm. So we do that to the second one, right? We do that to the second one. This is the same way you are doing it to on your MT5, right? So let's do it for the second one. So the same thing, 1.4, right? 1.4, 4794, right? And take profit to 1.4 to 1.4. So 1.34 something. Yeah, 1.34015. Are you getting it now? Then we have done that. We click on confirm. Now you're done. You're done with the market. So you're done with the market because you're envisaging. And so I say like this market now, unless for scalpers who they're going very fast, $2, $3, and they're not going to use 0.02, or they're going to use like 0.5 or 1p, one standard lot. So like this now, this kind of move now that has happened will have given them like $10 times 5, that's $50 on 2, that's $100. They have closed and they have made so much money. But you as a beginner, you have to be very careful so that you wouldn't run into problem. So you can see the market. Like I told you, I don't take trade that I won't be able to travel to a particular number of pips. These are the reason. So now let it sell down. So, but the best bet is that you want to wait actually for the market. Perhaps by the time you're waiting, the New York has opened, and then so you can see the massive sell probably. So what we have done now, whichever one, so you can now see, okay, the massive sell coming down and those things. So simples, primitive simple trading strategy will save you from unnecessary stress. Okay, so you can see gold. Now there's something quickly I will explain about gold now. You know, gold has a very big volume. Now, gold have been ranging for how many days now? So let's take out our moving average. Remember, I told you when the market is sideways, which is choppy, your indicator, or what do you call it, your trend, so you can see it's going to confuse you. So better still, in that point, at that level, what you are trading, you are facing a support and a resistance strategy with that's your price action. Now, so let's go for gold. Let me take off this. If you go back on daily time frame, you see that gold is just struggling for nothing. Okay, now let's go to daily time frame. Let's look at gold. Can you see now? So this is gold on daily time frame. So let me take off all of these now. So let's take off all of that. Now let's quickly look at it. Gold, look at this is a good trend. Now this is a displacement that need to be covered. So if you look at gold now, you look at gold. Okay, let me take off this even. So if you look at gold logically, gold was trending up, right? And now you can either have a bounce here or will break and then come and grab all this liquidity down here to this point or to this. These are liquidity area. Now, so we now look at where is the most recent low of gold? This place. Where is the most recent high of gold? This place. Okay, no, so we're now good, right? The next you now want to check is that where is the previous day high and low? Here is this. Okay, that's the previous day low and high. So let's take off all of these lines. Okay, this is an obvious point. Funny enough, it now happens to be the previous day high, right? Look at it here. So this is a pivot point, which is the swing high, and then this is the swing low. Now another area, this is a high. Now that gave birth to even yesterday high. So almost that. Now, but if you look at today, how has market traveled so far? So we can just label this guy, or we can create another line so that not to compound issues. But you know it's good on a line. So previous day PDH, previous day high, right? And then this is right PDL, previous day low. Okay, so we set it to the right and click OK. Now, very fine. So now let's step down to a lower time frame to 4 hours. So here we are on 4 hours, ladies and gentlemen. We're on 4 hours. Okay. Now, so here is 4 hours. You can see the market was, you can't really define that this is where the market is going to. That's a very cumbersome one for you. Now, so yesterday low and then yesterday high. No, market has neither swept yesterday high or low. So market is quite confusing, right? Now let's go to 1 hour. Now, 1 hour, you can attend to it that this market is just ranging. Look at yesterday, throughout it ranged. Today, so far, it has just still been ranging. You get it now? So that's what you are actually doing. So now, New York is about to open. When New York open, are we going to have a sweep of liquidity of yesterday or a sweep of liquidity high of yesterday? So you can't really give attention to what you can imagine to happen. So these are reasons why sometimes we always tell you that you should step out of the trade because it's not giving a clear direction. So for that, let's quickly look at it. This is a 1 hour time frame. So you can find here, which is not actually the previous day high, has not been swept, but we find a region. So let me mark it. Now, your support and resistance is the best and simplest strategy for you that will not give you unnecessary stress. There are advanced level of trading support and resistance, which you're going to go to like a demand and supply zone. But at that point, you need to understand basic things that where we talk about the market maker model, right? So, but I don't want to go into all of those jargon so that you will not have issues of understanding. Now, this is another pivot point, right? Okay, let's look at the thing we sold. Let's look at, we sold GBP. Are you seeing the GBP now selling, right? So look at the GBP selling. Let's look at the market. So look at our GBP selling. We're actually in $3 profit. I'm just using, this is an example we're doing, right? That I told you we'll have done more, So, but now afterward, when the market is moving your direction and it has moved very well, that's when you can adjust stop loss, right? To break even. So now let's go. So looking at our gold, we're analyzing. We have said, okay, this market, you keep now looking at, okay, this is a pivot point, right? Another one here, that's a swing. All right, so let's go down to 30 minutes. But I've told you that this market is a very terrible one, right? Because you're just ranging. So it take only scalper to go to 1 minute and be scalping and be collecting the money within all of this movement that was happening. A scalper will be collecting the money on 5 minutes, on 3 minutes, on 2 minutes, on 1 minute. So we go down to 5 minutes. Look at it. On 5 minutes, you will have traded this very nicely. And probably even if you enable your 50 moving average, it's still going to be zigzag. Can see now the usage here is not, because why? The market is not trending. Why do you want to use trend line for an non-trending market? So you can see, so the previous day low is this. So the market should come down and sweep this liquidity. 2, it should come down, reject, break down, and retest this. So you want to look for a sell. That's why you don't just entangle yourself. As far as you are concerned inside this place, if you are trading here, you are risking so much thing, right? That's one of the things I want you to understand. You are risking so much thing about that. So if you go to 3 minutes, scalpers will have been finding their own entry, which they're using price action as pure as possible, right? So probably when the market come down, look at the candlestick. This is like hammer and engulfing, and then this is a high and taking out. So you want to now take it, but you are going to be very careful because you are not going to be trading so much. So right, but scalpers will have made a lot of money because this is good. It has a very big volume. So at that point, even when you are targeting 1:2, because this is a hammer or whatever, and then this is an engulfing, this low was taken, this is a retest, and then this is an entry, and you are targeting this high, and then your stop loss is below this down here. Okay, so 1:2. So you are targeting here and yet still targeting your 1:2. So you go to your 1:2, that's about 140 pips. Unfortunately, gold has so much volume. That's one of the advantage. So let's look at our GBP USD. It's still moving. So we're at about almost $4 or thereabout, $4 plus, stuff like that. Now, so let's go by this. So now as the market moves, this is a swing and another swing here. You again target that maybe here, right? So that's going to give you almost 1:3, thereabout. That's about 190 pips. I think so. Seriously, what we call range in gold is another money-making machine for people who know what they are doing anyway, but it's quite difficult. Now, especially when you are close to market opening and all of that. So now look at it. Another thing has happened here on gold. So the market has come down to this point. These are liquidity areas. So you probably can target here because this is a lower time frame. Be careful what I'm showing you, but you are not going to be exposing so much, right? Because this is not a trending market, it's a sideways market. The market was here, so you expect this market again now probably to buy up here and sell down, because I told you about the New York market opening. If you even use your MACD, I think your MACD, to an extent, at this lower time frame of 3 minutes, your MACD can actually serve certain purpose so that you can see some crossover. But you work more on the price action. What's the price action? Candle and market structure, as it were. Go to 1 minute, you're probably going to find a lot, but I think 3 minutes make more sense, right? So that you will not entangle yourself, because if you are not a highly professional trader, going by that can be very, 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 very risky, right? So let's look at our GBP. Can you see now we're selling down, ladies and gentlemen? This is how I trade. Purely price action, support and resistance strategy. Of course, supporting yourself with other momentum. So look at it. This is like a double bottom, but you are not waiting for a neckline here. And then this is a buy up and engulfing candle. And then you are targeting this up here. It could get here and stop, but you're targeting up here. Meaning, if you come back here and you want to now buy, so after this candle engulfing, this is your entry, and you're targeting up here, and your stop loss, of course, below all of this, like a support. So that means 1:2. That's 1:2 point something. This is about 100 pips. I think we so much leave so much money on the table when gold is ranging. Even instead of us to be scalping and be collecting some money, we're leaving them on the table. It's quite unfortunate anyway. But you have to be very careful so that you don't subject yourself to so much stress while trying to capture small, small moves, as it were. So, but you're targeting that this guy should travel up here, right? But when the market open, New York open, remember that down there is a liquidity ungrabbed. But of course, you know that gold have been ranging, and so you cannot really define that in practical sense and all of that. So um, that is what it is. And look at it in 5 minutes. So that's what it is. So you just need to learn and understand what we're doing basically. I hope that is clear enough. So you can see the GBP that we sold down. Remember, I told you it's a confused stage. And then if you don't identify some of those basic points, so you're looking at this guy to travel here, come to sweep the liquidity. Then once it's swept, you want to look for a buy, right? So like ordinarily, because as a scalper you are not going to wait for so much move and all of that. As a scalper, I haven't found all of these. I told you, I think was it on 5 minutes or 3 minutes, we saw it like a double top here. That was going to give you probably an entry and all of that. So that is what it is. So when I'm now waiting, my major entry I'm waiting for is for the market to come and what? And sweep this liquidity, all right? Once you sweep this liquidity and buy, then I want to look for a buy positions and as far as possible. But if you look at even your MACD, it continue to sell. This is sell. This is a continuous selling and all of that, which was a high, and then create a low, a high, then this is a major low. Then within this small time frame, anyway, you need to understand that. Okay, so these are basic things that you need to just understand in the market so that you don't give yourself unnecessary stress. Even before you start thinking of some kind of indicators or scanners and all of that, you'll be money and you'll be fine. This thing I'm teaching us is simple, but how many people does apply it? I send this signal, right? You can see it's on the 1 hour time frame, but people don't know how and why do I send the signal. Okay. So this is an advanced level, so I'm not going to go into that detail. I saw some people were buying, but I was not comfortable in the buying because this has not finished selling. Okay, you can see now the moment it break this point, to target this point and all of that, that's going to be another massive profit and all of that. Meanwhile, we've been trading and selling Bitcoin since yesterday. Okay, so ladies and gentlemen, I hope and I just hope everyone is going to pay attention and go through this training over and again so that you can master this simple support and resistance strategy so that we can be in charge, make money, build up, help our family, build up our finances and all of that. Okay. Now, if you even look at this yesterday low, it's in consonant with this, like I said, another liquidity point which market could travel to sweep. And if you sweep this, and now instead of sweeping in a return, you now break and retest. That means you are selling, targeting all this point, all this point, all this point down, as it were. Okay. So this is very, very lovely. It's a very simple thing But if you complicate it, you're going to pay for it. Every sorry in trading, it ends in paying for. You pay for your mistake. Okay. Cost of your mistake is in dollar. You pay. You lose the pips is in dollar. Interpretation of that loss is in dollar. You've lost it and all of that. So can you see now? So, but if you're scalping, when market are come to a point where you're scalping, stay with one instrument per time so that you can know when they have changed their movement, when to now move in again, when to now exit again as much as possible. Is that clear, everybody? So please, this is a bonus training for you. I just felt like, okay, everyone need to have an idea. All right. So what should I look out for? And then you keep practicing these. This is like a daily routine as a business person, as a day trader, and all of that. So those acronyms, just get to know them and all of that. So, ladies and gentlemen, you're welcome once again. My name is Midas Felijimo. I'm the team leader of Plan B Express. So, what we want is people to achieve greater result in their business, in trading forex, in trading crypto. So, the same policies or strategy of this technical analysis is applied to every instrument. So, not only forex. All right. The only difference is that if it's forex, you want to be concerned about what the fundamentals saying and all like. Okay, so that's the thing. So please watch it again and again. Take note, write down notes. If you're distracted in watching the first one, go back and get settled, focus, discipline yourself, pay rap attention, and learn those basic things. Thank you very much. Now let's make money together. Pay attention to the group, your Telegram group for signals, and then of course identify when signals has failed or when signals is still active. So it makes a lot of sense. So bye for now.